price will reverse. And I see the candle here represents a day activity in the market. So this is yesterday's candle, and this is today's candle. And if you look at this candle very well, look at this current candle very well, look at it very well. You can see that the price, when the price opens today at this low, the price closed yesterday at this low. So the price opened here today, then pushed up. The price pushed up to retest this broken support right here. Then what did you see? The sellers are started selling now, and the price is pushing down. Look at this long week, which means the selling pressure is much right now. So once you see this type of pattern, if you are in this market, you should get out from here. Once you see this type of pattern. So these are reversal patterns that we look out for in the market. So on this same chart, right here, you can take this as our double top. Once you see this type of thing in the market, then you should know that this market is not going anywhere. That is the neckline of this double top. The first top and second top. So once you see this type of patterns in the market, you should know that I have to get out of the market. Let's see if we can find something else this way. Okay, let me go to okay. This is another example of that pattern we just talked about. Right here, you have your left shoulder. This is a forex pair, but the same thing applies for all these markets: stock market, the forex market, and the crypto market. That's your head and the right shoulder here. And you can see there that once the price broke out of this pattern, look at what happened later. Look at it. The price fell. Look at that. So let me see if we can have double tops or double bottom. Okay. This is an example of a double bottom here. The first bottom, and right here we have the second bottom here. So once you see this type of things, you should be ready for a trend reversal. So the next thing is to look for the neckline of that pattern, which is right here. Then place your drawing tool here and wait for a break out of that pattern. Then you can buy. For example, here, the breakout was done here, and right here you can place your trade and look at what happened later before the price reversed here. So that's how we spot those are the patterns that we look out for. In anticipating the change in reversal. Sorry, change in trend. So if yesterday we talked, I talked about the higher highs and higher. Somebody asked the question in the chat before. That how do you draw your higher highs and higher lows? Let me go through it once again. how do you draw the support and resistance? We draw them with the equal lows and equal highs for horizontal support and resistance. This is a perfect example for that. Here we have equal lows right here. We have multiple touches on this zone. Then something must be here that is preventing the price from falling further. So right here we have support. We said this yesterday that support level are those floor levels that prevents the price from falling further. And we also said yesterday that the resistance level are those levels that prevents the price from pushing higher. Look at this level here. There is a force at this level that is preventing the price from pushing up. So that is our resistance level, our resistance zone. And right here, there's a support here that is preventing the price also from falling further. So once you are on this type of levels, you should know that, okay, is the price, is it going to break out? Or is it going to reverse?
Please, what made you so sure that this was going to be horizontal?
Which one? Yeah, I said you look for equal levels, equal highs. This is I1, this is I2. So you put your line here, your resistance line here. You draw them with equal highs. Right here we have the first high. And right here we have the second high on the same levels. Both highs are on the same level, just like the support here too. Look at this. Do you understand now?
Yes, sir.
Yeah. So once you are on this support and resistance levels, you should anticipate reversal or breakout. That was why we called it yesterday major decision zone. If I want to buy now, I'm looking for a buying opportunity here, but we have to wait for the confirmation. The confirmation is, how do you confirm it? It's by you looking for the next resistance here. That's small resistance. Like we have it here. We have 1, 2, 3 touches here. We have 3 touches. So for me to go into this trade, I have to wait for the breakout of this resistance, like something like this, then buy. So I won't buy here because if I say this support will hold and eventually, unfortunately, the price breaks it down, then my account will start bleeding. So it is very important for you to wait for confirmation before you go into any trade. So that's how we look for formation. So how do you combine? Okay, let me talk about the higher highs and higher lows. Look at this market. Look at this chart. After the price has printed this triple bottom, you can see that the price kept pushing higher. It pushed up, then came down. Pushed up, came down. Let me highlight it again. From this low, the price pushed up here. It came down here. Pushed up, came down. So a trend has started. An uptrend has started. Then pushed up again, came down, pushed up, came down. You can see that the price kept pushing higher until the buyers are exhausted. Then start seeing a change in trend. Can you see it? Then the price started trending down. Started pushing down. So these areas, let me highlight them. This is the beginning of this thing. So this is a low. Right here we have a double low bottom here. So this is low. Make use of this low. Right here we have another low. So in this uptrend, these are the lows we have here. But why do we call them higher lows? This is the first low. And we can see that the next low is higher than the first low. So this is a higher low. It is higher than this. So we call it higher low. Then the next one is higher than this. We call it higher low. And the next one is also higher than this, the previous one. So we call it higher low as well. Do you understand? So to draw your trend line support, you have to connect these higher lows with your trend line. That's what we're drawing to. And right here, we have the high here. The next high was higher than, is higher than the previous one. So we call this one a higher high. The next high is higher than this one. So this is another higher high. Here is higher than this, then another higher high here. So we have the last high here. So let's connect this these lows. Let me remove. So let's connect those lows. So with these lows connected, we have a well-defined trend line. This is the source of the trend line. We have the first touch, the second touch, third touch. Then right here, the price reacted to this trend line here. The price pushed back, as you can see clearly, that we have a very long tail here. So the price pushed back before coming back to eventually break the trend. So this is the break of the trend. This candle is the break of the trend. So, and that shows us that a new trend is about to start. So combining the breakout and the reversal patterns of this thing. For the breakout, you need to look out for something like this, a trending phase, a mini trending phase or major trending phase. Then once you see something like this big candle breaking that trend line, breaking that trend, then you should know that okay, something is about to happen. But for more confirmation, this candle has already broken this trend right here. But for you to be sure that okay, don't let me take that. It might be a fake breakout. So because at times we do have fake breakouts. So for you to be sure that that break is not a fake breakout, you look for a reversal, a complete reversal pattern, just like the head and shoulders, double top, triple top, or a descending triangle. Those are the middle ones we have. The head and shoulders, inverted head and shoulders, a double top, double bottom, a triple top, a triple bottom, a descending triangle, and an ascending triangle. So once you see that on those charts, you should know that okay, this thing is going on a reversal. So let's check this out again, this area out again. We talked about it earlier. Look at that trend phase. Remember, we draw these lines with the tails of the candle, not with the body of the candle. You can't draw it like this and say you are drawing a trend line. No, it is not correct. So you make sure the lines go through the tails and not the bodies of the candle. So look at this trending phase now. Look at this trending phase. There's never been a time that the price closes outside this line. So this is a downtrend, a clear downtrend. Until the price got to this support. And initially I said when you see the price approaching a support or a resistance zone, then you should be anticipating a reversal. So look at what's happened here. The price created triple bottom on this support and broke this trend. This trend has been broken. This downtrend has been broken. But for more confirmation that, okay, we are safe to buy, you need to wait for the break of that resistance before you go into the market. So once the price pushes up and closes up above this zone, then I can say, okay, yes, we are safe to go in. So let's look at more charts and see how price are. Okay. Look at this chart. Can you see my charts, please? Can you see my screen?
Yes, sir.
Yeah. This is Cardano. Let me go. Okay. This is Cardano USDT. Okay. Let me go to the daily chart. Okay, Cardano USDT. Clearly, in this area of the chart, we have a well-defined resistance zone here. Here, we have a well-defined resistance zone on the daily chart. So when you pick up the drawing tool, I'll put it out. So this is the first touch, the second touch, the third touch. So let's go down to the 4-hour chart to see what actually happened right here. What I said about the reversal patterns and how we can spot them earlier on. Okay, remember about this zone. Yes, this is the 4-hour chart. The price pushed into this level. Then, before the reversal actually happened, the market printed a reversal pattern here. I just talked about the descending triangle. When you have a shape like this, then okay. When you have a shape like this, falling trend line, or you can call it a trend line resistance, then a flat bottom. This is what you call a descending triangle pattern. Once you see something like this in the market, you should know that, okay, it's likely that the price passes from here. Let me show you this thing first. So when you have something like this, when you have price movement like this, in this type of a shape, you can see that the price kept moving in that narrow space. This is what happens most of the times, and the price will fall. Can you view my screen very well, please? Are you with me?
Sir, but what you're drawing is in the main space. It's not. There is no wick being joined together. There is no.
Yes, I'm just showing you. I'm just showing you what it looks like. So we'll go back on the chart now to see how it is.
All right.
Yeah. Please pay attention here. If we look at this price action here, we see that we have a high here, just like this. What I just showed you on chart. This diagram. We have a high here, just like this. Then we have a lower high, just like this one. Then we have another lower high, just like this. Then we have a flat bottom right here. You can see that each of the time the price tries to push down, it got rejected here with a strong force. So which means here we have flat bottom, flat support, and right here we have the falling trend line. Once you see these patterns at resistance zone, you should know that the price will fall. It's telling you the market is communicating to you that the price will fall. Do you understand now? Can you see it?
Yes, we can.
Yeah. So let's look out for this type of pattern again. Let's go to BTC USD.
Why is this one not having a horizontal resistance?
Which one? The other. We have a resistance here. I will find that pattern at the top of the resistance. You understand? And we said earlier that when you see when your price is approaching a resistance or support, that you should anticipate a trend reversal. And look at what happened here on the 4-hour chart. Do you understand? This is a resistance here. Let me see. Can you see it now? That's right here. We have equal highs here. 1, 2, 3. Do you understand?
Yeah.
Okay, so let's move on to BTC USD. Right now, everybody's talking about reversal, price, the dump in price, and all those things. Can you hear me?
Yes, we can.
Okay. So right here on BTC USDT, we have a flat bottom here. First touch, second touch, third touch, before the price finally broke out of that, broke out the support. Right here, we have a high and we have a lower high. So this is a descending triangle. Again, on BTC USDT. The same thing I just showed us on other 4 hours chart. So if a market is in a downtrend, maybe moving like this, in a downtrend, creating lower highs and lower lows, something like this. And suddenly, you start to see something like this, maybe, okay. This is the direct opposite of a descending triangle, which is an ascending triangle. So you start to see something like this. And the price starts moving like this in this shape, then you should be anticipating a reversal, because once the price breaks this flat top, it will start pushing up. So this is an ascending triangle pattern right here, how it looks like, the opposite of this, the descending triangle. So on the chart, once you see these chart patterns, then you get prepared that, okay, something is about to happen. The trend is about to change. Let's look at more. Let me see if we have some others. Okay. This is an example of a resistance. Yeah, a well-defined resistance. First touch, second touch, and here we have multiple touches here. So you can see that the price action is showing us that there is pressure here. The buyers and sellers are locked there. The buyers are trying to push up. The sellers are trying to sell. Look, for example, look at this first touch. When the price came in here, it moved away immediately. Second day, this is the chart. The second time the price came into this level, it moved away again immediately. But look at this. For the past, let me count the candles 1, 2, 3, 4, 5, 6, 7, 8, 9, 12. For the past 12 days now, they are locked here, which means the buying pressure is much now, and people are selling as well. So let's see who will overcome that. Let me see.
Well done, TJ.
Okay, sir. This is another example of a descending triangle. Right here, we have that flat bottom here. And here we have the first eye, and here we have lower eyes. Once again, let me remind you, we don't draw these lines through the body of the candlesticks. We draw through the tails. So you can draw it any way it pleases you, but make sure it's not going through the body of your candlesticks. So look at this. After this pattern got broken right here, the price fell. Can you see it? Look at that. And since then, it has been ranging. Since then, it has been ranging. Right here again, on my screen, we have another reversal pattern. Here, we have the descending triangle. Please take note of all these things. There are things that occur every time in the market. Once you see these patterns at the resistance, then you should get out. The price will reverse. Look at that. This is a descending triangle pattern. Look at that sharp movement. Look at this big candlestick. Once you see this type of things in the market, flat bottom, then a descending high, a high lower, followed by lower highs, then you should get out of the market. And here, before the price reversed here, it gave us another sweet head and shoulders pattern. Inverted head and shoulders pattern here. Here, you have the left shoulder. We take this area as our head. Then at the next touch, you have your right shoulder. Hello? Okay.
Your light is it
Just mute the guy.
Yeah.
He probably doesn't know he's troubling all of us. Hello, teacher, I can't hear you. Are you talking?
Okay, can you hear me, sir?
Yeah, I can hear you now.
Okay, yeah. So after the price broke out of this pattern, the price started pushing up, started pushing higher. And here again, on AVAX USDT, the price action here is telling us something again. Every time the market communicates, it is left for you as a trader to see and listen to what the market is telling you. Look at that. Look at that low, this lower highs. Can you see it? At the resistance again. This is a high, a lower high. This high is lower than this, a lower high, another lower high here, then the next lower high. But look at this bottom. It's a flat bottom. So this is another example of a descending triangle. This is where the price is at the moment. So the price is telling us something here, and you should pay attention. So as it is in the coming days, I expect the price to come to move down, then somewhere around here, break out and fall. So you have to pay attention to all these price actions. They are simple. If you can just follow the distance, once you see these higher highs, lower highs forming simultaneously, then and this flat bottom, you should be anticipating the price reversal. So let's look at other charts. Let's see if we have something good on them as well. Okay, this is USDT. Okay, we have. Yeah, let's start with this. We have a double top bottom, a double bottom pattern here. It's also a reversal pattern. Once you see that this type of in the market, this type of shape. This is the first bottom. And right here, we have the second bottom. Right here, we have the mini resistance. So we have to wait for the break out of this pattern before you buy. Look at the break. So right here as well, we have a small trending face. Look at this. Look at that. So this area is an area of high confluence where the price broke out both the horizontal resistance and the trendline resistance. Can you see that? This is a trade of high quality where you have multiple reasons to buy. You have your horizontal resistance broken and you have your general resistance. This trend phase 2 got broken out here. So let's move forward. Okay, here is another example. Look at this. We have a trend, a major trend phase here. Look at that. Okay, looking at this chart, we have the first high, the highest point on this chart here, then followed by lower highs, followed by lower highs. Okay, let's see if we can connect these lower highs. Okay, let's start from here. Okay, that's 3. 1, 2, 3. Can we connect more? Yes. It's not going through the candlesticks yet. Okay. Remember, we said we don't draw through the candlesticks body. Now let's look at it. We have a very well-defined trend line right here. The I followed by a lower I, a lower I. So we have multiple touches on this trend line, and the price has never closed outside that trend line. But recently, yesterday, we had this big movement, that big momentum. This is a close outside this trend line, which is telling us that, okay, this downtrend phase is over. The downtrend phase is over. But how do we confirm that is truly over? Is this not a fake breakout? Then the next thing you do is to look for a reversal pattern right here. Okay, how do you do that? Okay. Here we have a low. Right here we have a higher low. Okay, let's see what we can do. Okay. And here we have equal tops. As you can see, we have equal tops here, equal highs. So if you take your drawing tool and place it here, we have connected two highs successfully. And if you take your drawing tool and place it here, you have something like this. So the price is now moving in an ascending triangle pattern formation. Look at that. So this phase is coming to an end. So now later the price will break out of this business, start moving up. Even before that, let me remove this. We are looking for multiple confirmations to be sure that, okay, the price will start pushing up. That indeed that downtrend phase is over. Right here, look at this. 1, 2, 3, 4. We have equal highs there. Yeah. We have equal highs there. And let me zoom just. If you look at this very well, you can see this is your left shoulder. This is the head. And this is the right shoulder. The perfect head and shoulder pattern right there. Left shoulder, head, then the right shoulder. Look at how it is all defined. Are you with me?
I'm here.
Okay. So combining the reversal pattern and the breakout system, you can see that this trend phase is over already. This is a confirmation. This reversal pattern is a confirmation. So this area is our area of high confluence, where the price broke out of this pattern and this trending phase. So anytime soon, the price will start pushing up from here. So you have to be on the lookout for those structures, the double tops, double bottom, head and shoulders, inverted head and shoulders, triple top, the triple bottom, the ascending triangle, and a descending triangle. So those are the important patterns that we look out for when we are anticipating reversals, and when we are looking when you are looking for a breakout, make use of the trend lines and your support and resistance levels. So I think if you can practice, if you practice more, you find out that these things are the things that come across every time. Just pay attention and look at the chart very well. Each of the time the chart is telling you that what to do. So it is left for you to listen or ignore. Okay. Yesterday I brought out this chart yesterday, if you can remember very well. I drew something like this on it yesterday. So if you look at it now, look at what is happening right here. But okay, let's take a closer look. Right here we have equal lows. This is a breakout system that I'm about to show you. We have equal lows, which means our support can be drawn here. We have 1, 2, 3 on the same level, and four touches. Look at that. Can you see my screen? So the price broke out of this range. It broke down the support right here. It came back in to retest the support multiple times, and look at what is happening right now. The price is melting.
Hello, today. I think he might have gotten logged out. Let's wait for him a bit, please. See if I can give him TJ. Yeah, I think he got locked. Let me call him. So guys, please let's just wait for him. I tried to call him, but he didn't Maybe my call didn't get through to him. I'm sure he'll come back shortly.
I'm back, sir. Sorry.
Okay, good.
Apologies. The network was.
Okay.
Okay, should we? Okay, let me have the distance back, sir.
Let me,
Or we should go for the break now.
okay, what's the time now? Yeah, this is 9. I think we should take a break, guys. What do you think? Let me hear from them, or maybe they can do 1 more hour. Guys, we need to hear from you. It's your class.
Break.
Okay. So 5 minutes, we'll be back.
All right, sir.
All right, TJ, I'll just hand over host to you. So when it's 5 minutes, you can start.
All right, sir. Are we all here?
Yeah, I guess everybody is still here. Don't just we're cooling off.
So let's continue from where we stopped. This is that same pattern, that same triangle pattern on few USDT. We need to pay attention to these price actions. When you are looking at the chart, this is a pattern, the descending triangle pattern. Look at that. After the breakout, the price came back to this area, into that support area, to replace the price, to replace the zone. Then it fell off. Okay, let's go back. I think I have something. Okay. For example, this is cake. The price is breaking this trend line now. This is a trend phase right from here. When I bought cake, I bought it from there. So look at it. Look at that. Look at that serious uptrend. Right now, the price is back to this trend line. And it has, no, let's adjust this. This is not a clear break. Let's wait for a clear breakout of this trend line. Or we look out for reversal patterns right here. Yeah. Let's wait for a complete breakout, or because right here we're having I think it's going to form a triple bottom if the price will reverse from here. We have the right one, first one. We have the second one right here. And if the price will reverse from here, this will be our third bottom. But we have confirmation. We have to wait for confirmation. We have to wait for the price to break out this resistance before going in. Or wait. So if you buy from here, you should know that your bus stop is right here on this line. If the price comes back to break this area, then this will be our next stop.
Sorry.
Yes, sir.
Yeah, we can tailor the training to specific questions I have heard from people.
Okay.
I remember some people were saying then that some of these tools that we use, not the drawing tools,
okay.
Yeah, what do you call
okay.
the Bollinger Bands?
The indicators. Okay.
The indicators, sorry, yeah, indicators that they want to know what they are for and how they are used to confirm market direction, so that it won't be like they're just picking things and they don't know what they are for.
Okay.
If you know the purpose
actually,
of it, you will not abuse it. You'll be able to use it correctly.
Yes, that is. Yeah. Okay. Let me start by saying this. Indicators are those tools that are mostly used to determine the trend of the market. Yeah, they are mostly used to determine the trend of the market. For example, now this in the latest last chart I dropped on the group, I used. Okay, let me take it off. I used 50 EMA in that analysis. The EMA means exponential moving average. This moving average is the average of a particular coin or market for, as in the average price for a particular period. For example, if I say 5 moving average, it means 5 days moving average. The price of that market for 5 days, then divided by 5. So this is where we pick those this thing out. Indicators and strategies on your chart. Right here, where you see FX. Come here, you click on it, and type it in. If you want to use the exponential moving average or the simple moving average. So for the exponential moving average, type in moving average exponential. See, this is it right here. So once you click on it, you come here to do the settings. If you want to use a 100 moving average, or you want to use a 50-day moving average, or you want to use a 9 days moving average. But the most common moving average that are being used are 50 moving average, the 100 moving average, and the 200 moving average, or 250 moving average. So let's use 50 in this instance. Okay. You can see length, which means the days. So this is a 50 moving average. This moving average shows us the direction of the trend. And when a trend is about to change, we see the price going through, you see the moving average going through the price. You understand? The moving averages work best in the trending market, just like you are seeing it here. Look at what happened here. It worked here as a dynamic support. You can see that the price came into for the first time, bounced off, and came back again for the second time before cycling up. So with this moving average, sometimes you can use it to draw your trend lines, looking at where the moving is located. Look at that. You can see that at some point right here, the moving average got aligned with the trend line. So clearly in this area, this zone, we are in a trend here. But immediately the price, the moving average started going through the price, through the middle of the price, then you should notice that, oh, something is about to happen. Look at what happened here. This moving average here served as a dynamic support again. Look at that. Look at the price injection on that moving average. Look at this candle. So right here, the price is back. The price went under the moving average and traded for some time, for 2 days. I referenced this recently in one of my listings of my analysis. So right now, the price is trading below the 50-day exponential moving average. That is telling us that right now, a downtrend is about to determine that this is a relative strength of a particular trend. Yeah, look at this. On this RSI, where when you have the price trading above 70 level, then we say the price is in an overbought condition, just like this one. Just like this one. And when this line right here is below 30, this is 30 level. Yeah? When it's below 30, you say, okay, this price is in an condition and it's likely to bounce up a bit. But though most of the times it doesn't work that way. So you don't use indicators alone to trade. Please take note. You don't use indicators alone to trade. So there's another one, the Bollinger Bands. Let me see if I can get that here. Yeah, this is the Bollinger Bands. When you apply this to your chart, it gives you a dynamic support and a dynamic resistance, as is clearly shown here. And you have a middle line as well for the middle of your distance. Look at that. You can see that when the price pushed out of this line, this band, it fell sharply from here. Look at that. So when you see price pushing out of this band, you should know that, oh no, something's about to happen. The reversal is imminent. Look at this. Look at what we have here. Let me highlight it. When you see things like this happening, then if you start taking your profits if you are in a bull market. Look at that. After the price pushed out here, it's printed a down this downtrend. Sorry, downtrend. It's sharp for the price. Look at that. Same thing happened here. Look at that. So now let's look at what is happening here. You can see that the Bollinger Bands right now is moving almost in a straight line, almost horizontally. Something like this. Which means the market is not trending. It's not in an uptrend anymore. Look at that. When things like this happen, you see the Bollinger Bands, it usually corrects itself and changes the direction of which the price is going. But normally, on a normal day, when it pushes through the bands and got rejected, then the price will go in the other direction. That is for Bollinger Bands. And let's talk about this into the Fibonacci too. Okay. Indicators. Let's talk about the Fibonacci too and how they are used. Yeah, the Fibonacci tool is used in two different ways. Either to project the next this thing, the next stop for the price, or to find that level where the price will stop its retracement. For example, on this chart now, on this USD, BTC USDT. Can you hear me, please?
Yes.
Okay. Yeah. So to draw, to use the Fibonacci to know to look at that level where the price will drop to or this thing, we look for a recent low. We look for that recent low on the chart. And on this chart, my recent low that is very obvious is this level. So you take your pick the tool right here on this box here. Where we have the pitchfork, this pitchfork, the pitch fan, gun box, and all that. So this is the Fibonacci retracement. So once now look for that lowest point, in the recent lowest point. And right here, I have it on this candlestick, this AMA candlestick. So start drawing from there on that chart before the price started retracement. So look at that. That's how we draw this. So when you are using it to look for a retracement or a price where the price level where the price can drop to, for start pushing up again, the most important levels there are the 0.5 level and the 0.618 level. If you are using it to determine a retracement level, yeah. So the 0.618 level, as you can see here, where my cursor is, and the 0.5 Fibonacci level. Right here, the price is already on 0.5 Fibonacci level and it's breaking it down. So I think the reason why people are projecting 42,000 right now for BTC is because we have our 0.618 Fibo level on $42,000 level. That is it. This is 42,170. That's where we have the 0.618 Fibo on this chart, and it's a very important level. It's a very important level. So most traders believe that when the price comes down here, then they expect the price to start back. So people are expecting a bounce from this 0.618 level. So that's the first use of Bible retracement to determine the retracement level where the price gets to before it bounces back. And secondly, it is used for price projection. It is used for price projection. For example, if this price, let's go back to ADA. Let's work on ADA. If we are to use it for price projection, we look for the last correction level. The last analysis we did with Engineer Ken, I think we did something around here. So if you look at this very well, let's use this level for this area. So you pick your tool, the Fibonacci retracement tool. Then you draw it from the top of where the correction started. Now we are using it for price projection. Here's the next post stop, next price stop. From here, this is my highest listing from where the listing started, the retracement started, the correction started, and to the lowest point right there. Can you see that? This was where the listing started, the correction started. Then this is our lowest point here. So right now we are trying to project the price. That was before the price came here. So the nearest price to this level was 2.4, and that was our projection. Look at it. The price got there and started coming down again. Can you see that? So the first target was 1.618, which was around 1.9, I think. Yeah, 1.618 level. That was around 1.886 or 1.9, approximately 1.9. Yeah. Then the second target was 2.4. That was our last analysis when we projected that price with these two. So it shows you, okay, if the price breaks out of this area, where can I take my profits? So the first target where you take a profit is this level 1.618, first one, then the second one. right here. So that's how we use the Fibonacci to determine to project the price and look for those retracement levels where the price, a potential level where the price comes back. Do you understand?
I'm here. Somebody's asking that they would like you to explain the. Somebody saying they'd like you to explain the MA again.
MA simply means moving average. Moving average. When you say moving average, it means adding the high and close of the candlestick for a couple of days. If you say 5 days moving average, it means the open and close of that candlestick or of the 5 day candlestick. You understand? So 5 days, for example, if the price opened at $2 on day 1 and closed at $3, so the open and close of that candle is $5. Then day 2, if you have the same thing for day 2, that is 10. For day 3, that is 15. For day 4, it is 20. If we have the same price for the open and close of each candlestick. So if you're not using a 4-day moving average, that means 3 plus 2 in 4 places. That is 20 divided by 4. You understand? So that is how the moving average is calculated. So we use it to determine the direction of the trend. We don't trade with it. You can't trade with it alone. But you use it to filter the trend. You understand, sir? Am I clear?
Yeah, it was Maureen I was asking. So Maureen needs to let us know if she understands what you're talking about.
Okay.
Is there, Shishu? Please.
Yes, I understand, but how do you apply it to? I understand it's the average of this thing divided by. I understand that part, but what I'm saying is how do you apply it to the chart? You explain that when it moves, when the candlesticks moves out of it, it means something. That's what I want to know.
Okay. Let's apply it.
Please, can you just come again for the rest of us?
Okay. Look at this chart very well. To apply it on your chart, you come to this box here where we have FX.
Okay.
So you click on it and you type it here. Moving average. There are a lot of them. So here I have the moving average here. Moving average exponential. This one is faster than simple moving average. So though I prefer this EMA, the exponential moving average, most of the time. But we have just little difference between exponential and simple moving average. So once you click on it, it comes up here and you see that tiny line on your chart. So as most traders always say, you go crowd. So 70% of the traders, uses 50 period, 100 period, and 250 period, 200 period. Are you with me? So when you come here, you see you find the settings here. Set an icon that's pointing out settings here. Once you click on it, you come to the input and style. Right here, you change it. This is a 9 period, which means 9 days. So you change it to 50. I use 50 most of the time. So you click OK. Then you can see that the moving average has changed. Right now on this chart, see what is happening. The moving average is acting as a dynamic support. Look at this. So the price is trading above the moving average, which means we are in a clear uptrend for other USDT. We are in a clear uptrend. If we go to let's check out here. Look at this. This is BNB USDT. Let me simplify it so that you can see it more clear. Okay. Can you see this blue line now? Can you see it very well?
Yeah.
Okay. Can see that the price tried to push into the 50 EMA. So the 50 EMA is acting as a dynamic support right here. The price is trading above it, which means we are in a clear uptrend. We are in a clear uptrend. Once the price breaks through the EMA and crosses below, close below, and starts moving below the EMA, something like this. If the price comes here and close below this movement average, starts trading like this, then the downtrend has started there. You understand? So let's look at one more chart. I show you. This is a BTC USDT Bitcoin. Look at the support it gave the price here. Here is acting as a dynamic support and it's acted well. Look at this. Look at this. Look at this. So price through here, the trend, as in the price was in a clear uptrend. But right now, look at what is happening right here. Look at what's happening right here. Look at that. Look at this. Look at this area. The price crossed below the moving average right here, came back to retest the moving average, and now it's back under the moving average, trading under the moving average. So right now, the next thing we should do is to look for price actions to back up this what we are seeing here. Okay, is the trend going to change actually? That's where you start looking for your reversal patterns, your price actions, your trend lines, and all these things. But right now, the price is under the moving average, and I believe the downtrend is imminent. Okay, this is another one. Look at the price action here on BTT USDT. The price action here is not looking good at all. We have a descending triangle right here, the flat bottom and the lower highs. Look at that. Look at that. Okay. Now let's take the moving average. Let's add this thing as well. Let's take it to context. All through here, the price was trading above the moving average. Look at what happened here when the price bumped into the moving average. Look at that big rejection. Have you seen it? Look at this candle. Look at this big hammer. Can you see it?
Yeah.
Yeah. So look at that. So even without these drawings, move the drawing. Look at that. Without the drawings, you should know that they move it. So look at this. It's supported the price here. The price bumped in again, went up. But the third time, the price pierced through the 50-period moving average with this big candle. Look at that, which means the trend is about to change. So once the price is trading below this 50-period moving average on the daily chart, then you should be considering closing your positions because a downtrend will surely show up. So now, if you now bring out your drawing tools and look at the price action here, you see that the price action is confirming what the movement is telling us. Look at this level here. we have a equal level here, flat bottom right here. First touch, second touch, third touch on the daily chart. Look at that. Look at this. Look at this rejection here. And finally, the flat bottom got broken. So right here, we have the lower highs. So this complete pattern is a descending triangle pattern. Look at this. This price action just confirms what the EMA is doing. Look at that. Look at this candle. This is today's candle. Can you see it? This last one here. Can you see it? This is an inverted hammer. Just like Mr. Gerard told us earlier, that once you see these types of candlesticks, you should know that the price is ready to move in the opposite direction. When the price broke out this level, it came back into the 50 moving average and the support. Now it has turned to resistance. And look at it. What do we have here? This area is an area of high confidence here on this candlestick, where we have the retest of the 50 EMA and the retest of the broken support turned resistance. Do you understand? So when you are in this market and you start seeing something like this, look at this. Look at this candlestick. Can you see that?
Yes.
So you should know.
Inverted hammer.
Yeah, inverted hammer. Look at this. Can you see that? Look at that. And right here again, on today's candle is printing an inverted hammer again. So these are signs that almost this price will go down. When you see the candlesticks, this type of candlesticks and this price action patterns. You understand? So now the price has started trading below 50 period moving average. So we should expect some downward momentum right from here on BTT as well. So all these things speaks volume. When you are looking at the chart, those are the things you look out for. What is the price doing? So if you pay attention, you won't get caught in the middle of the fight. So you know exactly when to go out of the trade and when to stay in the trade. Are we clear, sir?
Yeah. TJ, somebody wants us to analyze Shiba Inu.
Okay, let's see if we are.
And we want what is happening at the BTC now. Everywhere will be red for the next several.
Yeah,
go ahead, Shah. Let's take a look at it.
No, we've been saying it.
But yeah, for quite some time. That's true. That's like that's our first Bitcoin analysis meeting was like a month ago now.
Yes, sir. Yes, sir. We'll be saying it now.
But just even though you say people just never take it to heart that this is going to happen.
Yeah, it's going to happen.
So somebody has a question here. I just want to quickly deal with so that we can have a little break from the charts. He is asking. He says, "I promised a $10 gift to them. Please, how do I receive mine?" Well, this is why I always say people should pay attention to what news we send out in the groups. Because if this fellow note, you would have noticed that the promise was for those who made their training payment before the 5th of May and midnight of the 5th of May. And, I kept reiterating that in the group. So if the gentleman made his payment before that date, he should please contact me. And whoever else made his payment, his or her payment before that date, please contact me and I will do what I have promised. We would like to keep our promises here. However, if your payment was done subsequent to that date, you do not qualify. You know? So I just wanted to put that to rest. For those who paid before that date, and then please, for those who are still owing, I just allowed people to finish this training. Otherwise, I should have stopped it today, but I just looked at it. What is money? You know, you'll eventually pay. Either you pay or you eventually leave the mentorship group, and there you have a half-baked training. So I just want to remind those who are still who still have outstanding to do their best to pay. I understand the economic circumstances. I'm not blind to that. Thank you.
Okay,
TJ, please
let's proceed.
go ahead.
Let's go ahead with Shiba. So here we have the 2 hours chart on Shiba. Let's take a 50 period moving average into context first. This is a 50-year moving average on 2 hours, and it's going down. The price is trading on one side of on the left hand side of 50 period moving average. So it is clearly in a downtrend. The downtrend started with this descending triangle pattern. Look at this very well. Flat bottom and the lower highs. Then moved to another phase, tried to consolidate a bit to see if it should get some momentum to push upward, but no, got disappointed here. Again, look at this flat bottom. The price broke out and it's moving to the downside. So on Shiba at the moment, if you only take the grace of God.
There's even no bottom at all.
Yeah, no bottom. So
this is what do they call it? Uncharted territory for this coin.
Yeah, yes. So we are still in a very, very good trend.
Guys, something that's very important at this stage. I think I need to hammer it again since we're all gathered here. Unfortunately, a few people have dropped off. I know that charts can be pretty techy for people, but you know, you paid for this thing, you tough it out. You know, nobody was born with charts inside their brain. So something that's very important as a trader or as an investor is to be as unsentimental about your asset as possible. If your focus remains on the fact that you are here to make money, you don't give a damn about how beautiful the project behind the coin is. Except you are holding that coin for a strategic long-term pursuit, fine. Like me, I hold Bitcoin, I hold Ethereum. I will not sell either of those two in the next 4 or 5 years, no matter how down the market goes or how high the price goes. They are just coins. I believe that my grandchildren should come and meet some of it. That's my take on those coins. But if I am holding Shiba, which is a newborn baby that is less than 2 months old, still sucking breast, and I hold $100 or 1K of Shiba, Shiba gives me $400 profit. I don't know what I'm waiting for. Why I shouldn't take that 400 and move it to stable coins. Some of you may not yet know how to take profit, but maybe I will just talk about that. If you see that Shiba, you bought it with $100 and it's grown up to 150, that 50 or at least 40 out of that money, you sell it back to USDT or BUSD. If most of these swapping platforms, BUSD is the better stable coin to use because moving BUSD to Binance is 0 fee. They don't charge you. Moving BUSD from Binance to any of those wallets, MetaMask and Trust wallet, it's 0 fee. So like now, yesterday, I had a young man with me in my office. He's been with me for a very long time. So he was saying, "Oh, see this one, you're very excited. Goat is giving profit." I say, "Andy, take profit." He said he would take profit. We were together for a long time, like 4 or 5 hours. He was with me from like 10 till like 5 or so. So he went home. All that time we were together, I told him up to 4 times, take profit. Me, I saw my coin growing, $400 in one wallet, another $400 in one wallet. I cleaned the 400 out too and moved it to BUSD. I kept telling him, this morning now, when the market retraced, he called me and said, "Okay, I'm not even seeing the profit they are talking about." I said, "How will you see the profit they are talking about? Did you take the profit I asked you to take yesterday?" He said, "No." He was just thinking that it will keep rising. Okay, what makes you think it keep rising? Are you the owner of the market? Is the market your property that you can just say, "Oh yeah, Aqua Goat, start moving to," are you in control of? You are not. So if you are favored by God to buy a coin that appreciates and gives you value, take that value. Don't leave it there and be saying, yes, we're going to the moon. This thing, which moon? There are things that experience will teach you. What happened in 2017 was shocking to everybody. That Bitcoin would ever fall to $3,000 was something we never thought possible. But it happened by 2018 or 2019. We saw it grow. So what am I saying? Markets have a mind of their own. We only appease the lion in that market by trying to analyze and see which direction it's going to. But once that direction you have analyzed turns out to be true, God has favored you. If you see profit, bam, don't wait. If He gives you, you can have a target where you want to get to, maybe 100 or 200. But as it's giving you 50, first take that 50 now. It's like my internet is dancing, you know.
Yes, sir.
But you understand the gist of what I'm saying. Take your profit, take your profit, take your profit. You are not the owner of that project behind the coin. You don't know the people. Take your profit. That I'm shouting it now, so that you will not say, Mr. Gerald didn't teach me well. I know that I'm teaching you well. Take your profit. The reason why you are learning, going through all these many hours of sweat and struggle is so that you can make money from the market. So don't get romantic about the coin. Ethereum, there's one analysis I saw. It said to reach 50,000, I'm going to hold this my one. Don't hold it. If you find that you put inside, first claim that one when the market gives it to you. Thank you. So please go ahead.
All right, sir. All right, sir. So this is the chance we have on Cake USDT. Let's put everything in context now. We have the 50 period moving average. We have the price trading above it, though it pays through sometimes here, but move back over, crossover to 50 moving average to the upper side. So look at what we have here at the top of the chart. Right here we have that flat bottom again, as you can see. Yeah, we have that flat bottom. The first, second touch, third touch, then the fourth one, and finally, and here, look at what we have here. Once you start seeing these formations, you should get out of that market.
Descending.
Yeah, descending triangle. These lower highs. And look at that. You can see that the moving average started moving through the price here. So, which means the price is consolidating, either to continue its uptrend or break down. So if I'm in this market right here, I would have taken some profit here. Even before breaking that at all, I will take some profit and watch. If it breaks out this trend line, then I will get back in and buy more from here with my remaining distance on that market. But immediately the price closes below this level, look at these candlesticks here. You can see that they have not been a close outside this level. Look at that. So immediately you have a close outside that range, after this level, outside the support area, then you should know that you get out of that market.
Mhm.
Can you hear me?
Yeah.
Yeah. So you should know that you should get out of that market. Then look at what is happening here now. The price is trending down. Now the price is trending below the 50-period moving average on the 4 hours chart. Look at that. So right here again, we have equal lows here. The first one here, 1, 2, 3. Look at this. Look at this. Look at this. It's breaking through that red. So if you extend your support line, consider we have the demand zone. Come after it here, right here. Look at this. Look at this candlestick. 1, 2, 3, 4. So a break below this level, send that price $22 straight. The break and close below this level. We sell price to this level. To the next support area, $20. So that's taking everything into context, the price action and the moving average. Let's look at another chart. Okay, this is a ranging market. When the market is ranging, the moving average is as useless as nothing. But in the trending market, they are very, very useful. They are used to filter the direction of that particular market. Let's look at Ethereum Classic. Okay, look at this. Look at this. The price has been trading above the moving average. Look at that. All right, here, the price pierced through moving average, and right now it's trading above it right now. So if you have to take everything into context, price action and everything, pick your drawing tool, look for that reversal pattern. Even before the reversal pattern, look at this candlestick. This speaks volume. This first one. Look at what we have. Have you seen it? The tiny tail and the small body.
Yeah.
This green, this big candle. Look at that rejection. Look at that selling pressure. Look at that selling off. Yeah. People sold off from here, from this high. Look at that. As it's then. Okay. Now let's come down to look for pattern, for confirmation that okay, this price will actually reverse. Let's look for the price action here. Pick your drawing tool. Where do we have the follows here? We have it here. 1, 2, 3, 4. Okay. Look at that level. Right here, this line was acting as a support, but immediately the price broke through this line. It became our resistance. Yes. So look at this. Look at the lower highs. Can you see that? So another descending triangle pattern. So right here, the price tried to push up, maybe even to form an inverted head and shoulders pattern, the head, shoulder, head, right shoulder, but it is not working out. That is why it is very, very important. It is very important to wait for confirmations for close above that's little resistance. That's your neckline. If you are anticipating reversal here and you don't have confirmation, then you're on your own. Look at this. So you have to wait for that price to close above this resistance level, this neckline, right here, before you enter any trade. If you have to buy, if the price is in downtrend, I want to buy. Because if you look at this is a trading phase. It's a trading phase that got broken right here with this big candle. But we need to look for that confirmation, sure, that the price will start moving up. So how do you get that one? Look for those patterns. The ascending triangle, head and shoulders, double top, double bottom, triple top. So if you're anticipating a reversal here, you have to wait for that price to close above this level before you buy. Look at what is happening right now. There's no confirmation. Can you see that? So the price is moving downward. So the price is now moving to the downside. So this descending triangle is still working perfectly, which means we are still down trend. So that's how you spot those the price actions. So and also if you look at this 50-year, this 50-year, it's moving through the price. So we should expect more movement downside on Ethereum Classic as well. I think I did something on big. Okay, this is exactly of what I just talked about. Look at this. Look at this chart. Right here, the price started moving in this channel. Look at it. High, lower low, lower high, lower low, lower high, lower low, and suddenly we have a higher high here, where the price closed above this high, the previous lower high. So look at that. The price broke out initially right here. Let's look at the price action here on K. So the price broke out this line. This is a trend line so that you understand better. Look at that. Remember, I'm going to draw the line through the body of the candlestick. Draw the tails. So look at that. This is a trend phase, a minor trend phase. And the price broke out of this trend, of this downtrend, right here, this big candlestick. Then came back to retest this area multiple times. So, okay, now we have to look for confirmation before we buy. Okay, so the next thing to do is to look for a pattern right there to confirm that, that this price has actually broken out of this minor trend. And let's see if we can have some movement to the upside. So pick your drawing tool. Right here we have equal highs. Look at that. We have that mini resistance there. Okay, what part chart pattern do we have? I think we have the left shoulder right here. We have the edge and we have the right shoulder. So these are confirmation that actually this minor downtrend is over.
So TJ, when you're done with this, I think
yeah,
you round up there. It's almost time.
So look at that. So that's how we spot. That's how we trade those patterns and breakout patterns. Take a closer look at the chart and with those lines and chart patterns, then you are good to go.
If you can take screenshots of this and drop in the group for people, so that
yeah, I drop this in the afternoon.
Okay. Okay, so when they practice now, they can use this to guide themselves, at least for this currency pair.
Yes, sir.
So once you're done, let me.
Yes, sir. I'm true, sir.
Okay, guys. It's almost 9. A few things I need to let you know. Trading is like an investor is like a farmer. When the farmer carries his bag of corn to the farm to plant, he believes that that bag of corn can produce 10 or 20 more bags. But that's a belief. It's not cast in stone. It can even produce 50 bags if there's a bumper harvest. It can give him a measly 5 bags. Or herdsmen can chop the entire corn and it won't even produce. That's the life of a farmer. It's kind of like the life of an investor. So you always have to have that at the back of your mind, that nothing is guaranteed. And so you should feel privileged when the market gives you a profit. Don't look at it small. After all, Mr. John made $15,000 from only 500. So why should my own be 250? If it's $50, collect it. 50 after all, $50 times 450 now is almost 30,000 minimum wage. Some of you earn that in one trade. And because you are so used to dollar and all these things, you don't feel like you have achieved something. If you know what it takes to make $10 from a market that you do not control, then you know that God was with you in that $10 that you are seeing. Collect it and be grateful. Don't be greedy, because greed leads to failure in trading. And don't be fearful, because fear leads to, failure in trading. Just be neutral as much as possible. Don't be emotional. When you see profit, take it. When profit is not there, leave it. Let the market come to you. 2, do not trade with money that next month you need to pay Johnny's school fees. So you want to just quickly push this 200K inside the matter. People ask me that all the time. I can just have 200K that I just push for 2 months. And the market is not kalu machine or ATM. You can enter that trade with all your best analysis, and the trade goes sideways, and then you are stuck. 5 months you are there. The money, because if you use 1K to buy a coin, and then the market retraces, maybe because of news of some sort or the other. Like Elon Musk made a statement last week that threw the market into turmoil. 2 hours before that time, we didn't know he was going to make the statement. So if you did your analysis like 30 minutes before Oga Elon began to play God with the market, you'll just be shocked that the coin you thought would go up just went south, and then you are holding the bag, Like I always have felt that the people who are buying Dogecoin, that's what will happen to them. But who am I to say? But that is a scenario that can possibly play out. So you must have that in mind and tell yourself, okay, this is what I always tell people. If you left 1 million naira in the bank 12 months ago, that 1 million naira will probably have fetched you maybe $4,000, if I'm not mistaken. Today, that 1 million naira can only fetch you 2,000 plus, just slightly over $2,000. So what has happened is that money was a fixed deposit, but it was losing what is called real value. The buying power was dropping. You can't buy what it used to buy 1 year ago. So what I always say, for me, I do not have fixed deposits. My fixed deposit is in my Trezor wallet. So instead of leaving that money for one bank to be paying me peanuts every year, 2%, 4%, I put it in crypto, because that is money that maybe I kept in FD for my children or something. I don't need it on the immediate. So I can take it out of the bank and put it there. So if the market falls, so what? It's not money I need. I'm eating well, I'm feeding well, and if I need fuel, I buy it. If I need to pay my rent, if I need to send money to my kids, I have it elsewhere. So I can leave that in the market. If you know why that is important, this particular thing I'm saying, just like the importance of taking profit. If no matter where the market goes, my internet is dancing again. I'm very sure. Okay, I'm sure you can hear me now. No matter which direction the market goes, you will not be under pressure. 2, don't go and borrow money to trade. 3, Don't say, now you are in Mr. Gerard's group. They used to get prediction very well. Let me now position as Odogu BTC and start collecting money from investors and tell them that don't worry, I will give you 5% every month. How much is bank giving yourself? Don't worry, we'll have a place where we trade it. Then you come and wait for for me or TJ and Ken or any other person to be dropping trades, and you're using other people's money to take risk. When it goes bad, don't call me, don't mention my name, because I didn't send you to take people's money. As a matter of fact, I do not take money from people to trade. And I've had many people make that offer to me. And don't worry now, we don't need the money like that. Just why not be trading it? No, I will teach you how to trade. You go and trade your trading by yourself. If you make big profit and you feel like you just want to dash me something, I don't run from gifts, so I will take it and pray for you. If you make big profit and you decide to keep it, I'm happy for you all the same. But I will not risk my freedom and my happiness to be assuring you that I can trade for you. I never trade for myself, finish. Now you I won't trade for. Sometimes there are coins I bought. I bought Yifi the other day just for a short, quick trade. You know, one of the trades, Yifi 1, went into profit within 5 minutes. The other Yifi 2 has been in the market since last week. The negative position is somewhere around 25% now of the value I used to trade. But because the money is my own, I'm not under pressure. I didn't borrow it. I'm not accountable to anybody for it. It's my own. Even my wife will only just tell me, the thing went, okay. She will not say, go and bring it now. It's when it comes out of the market profitably that I close that trade. If I told you in the group the other day, I said I bought a coin lent in 2017 and it went down. In fact, I wasn't seeing it in my wallet again to tell you how small the value went. And then I totally forgot about it. October last year, I said, let me even just check all my wallets of those days. And I found that the thing was like almost $2,000. You know, I sold some and kept it. That became Ave. Lent changed their name to Ave. And the stock of Ave I have now is what I sold and left over. You see? So I'm not under pressure from anybody and I sleep peacefully. That is my desire and hope for you also. Please don't take a loan to trade. If all you have to start trading is 20,000, please start with that. God will bless it and it will increase if you just follow what we're teaching you. So I feel I have talked to you as a friend, a brother, and a teacher. And I trust that you are very wise people. You know what to do. It says, hope we'll get the video record of this. Yeah, I think, didn't I drop the second video in the group?
You did.
So I'm going to drop this one as well, so don't worry. And then I've already dropped the PowerPoint for the one I used for the anatomy of a candlestick. If you need it, you didn't download it here, I will also still drop it in the group. So ladies and gentlemen, this is the third day and the final day, but it's not the end of your training. Like I said, we are together on this journey. Even if it's a bear market, we will find ways to make money. So nobody should be anxious or worried. So are there questions for me?
So, sorry, please, you say you dropped the PowerPoint?
I dropped it. It's a file in the chat here now. You can see it.
No, I can't seem to find it.
Did you go to where files are? Okay, don't worry. I'll drop it in the elite group now.
Okay, thank you.
You'll see it shortly. Don't worry. Is there any other? Yeah, thank you. Welcome. Is there any other person who has a question? Please feel free. It's your class. You paid to be here. You didn't beg anybody to be here. It's your right to ask questions. And it will just be my happiness to be able to answer. It also means that what we have been teaching was not entering one side and going out to the other side. So please, questions. But I also realize that when you leave here now, you are likely to go and try to practice. And usually when you're trying to practice, that's when the rubber meets the road. But when you are practicing and you get to that point, please do not hesitate to bring your questions to the group so that we can jointly deal with it. The reason why I always ask you to don't bring it personally to me is because if you bring it to the group and we answer the question as a group, many other people who do not have the courage to ask will learn from it. There are just some people who don't like talking in groups, and I understand. It's their personality. So they will have questions they will not ask. But if somebody else asks, they will be happy that somebody asked. So it's important. Okay, people are sending direct messages. Okay. About the mentors. Yeah, what about the mentors? Which platform is the best to trade, sir, so as to practice? Well, good. Thank God you brought up this question. You can use the trading portal on most exchanges, take their API from TradingView. So I would suggest, rather than even limiting yourself to what's on Binance, you go to tradingview.com directly and open an account there. TradingView is a trading and chatting platform. That is this kind of charts, not WhatsApp chatting. I'm talking about the price charts, or what do you call this thing? Well, it's a chatting platform, and then it has a social media element. On TradingView, you will meet people who are very high ranking, who analyze markets that you can follow, the way you follow people on Twitter. When they update their analysis, you will see, even TJ is there now. TJ, please drop your handle on the elite group now, so that people can follow you there. I think that will be a boost to your own ranking there. So please feel very free to drop it for them to follow. So you can go to TradingView. All the tools you have here are also there. They are the owners of the tools self. So you can just use it from there. You will come across other analysts who analyze markets. You also look at what they are saying and try to understand, try to see the way they do their charts, whether you can also replicate it. That's the way to practice and learn. There's no other way. There's no other way. So yes, for your trading where you keep money, Binance is the biggest. I like to use the biggest and the best any day, any time. I would rather be with the biggest than a small unknown exchange. So you said we're entitled to mentors for a year. The elite group is your mentoring group, and that's where we mentor everybody together. That's why we say, if you have questions, please throw the questions there. We'll all gently deal with them, and everybody learns from it. So it's not like we have specific mentors for a specific person. We can't possibly have enough people to do that. So I'm happy there are questions now. I like this class. So, TJ, what do you think? This class is very interactive.
Yes, sir.
Very interactive. I like this, much more interesting than the last one. Okay, any other question? Okay, fine. Thank you, ladies and gentlemen. Please never stop learning. Say, where can we buy doggy? You can buy it on what do they call it? You can buy it on Pancake Swap. You can buy it on, I think it's on Bakery Swap also. So those are places you can buy it. But I don't know where that coin is now in terms of price action, because it did massive movement. I sent you the screenshot now. It did massive movement that day. I don't know if it has retraced. You might want to look at the charts and make your decision. So thank you very much.
Thank you so much.
We're only closing. We're not
Sir.
leaving you. We're together. Yeah, Tahir, please go ahead.
Thank you so much for these 3 days. I had a good time, and I'm sure everybody else did. I want to appreciate you specifically for the manner in which you handle the lectures, the simplicity, the honesty, the openness, and I mean, it was a whole wonderful experience. And well, it's a learning curve. I don't think anybody can beat his chest and say he or she has arrived. But we keep learning, and thank God that we have the 12 months period for mentoring. Thank you so much.
You're welcome,
And I
my brother.
pray that this decision we've all taken will come out to be that will all be victorious, be happy, and appreciate you, and bless all that we have invested in it. And I
Amen.
pray that God blesses
Amen.
our hand in
Amen.
all we have chosen to do in this regard. Thank you so much.
Amen. God bless you too. God bless everybody here. And thank you so much. Have a wonderful week ahead. Thank you.
Thank you.
So stay connected to the group.
Yeah,
I will be making announcements. We have an AMA this week we will hold. And I think Sule will be teaching us one or two things about OneCoin like that. An AMA is Ask Me Anything. So you are coming there with questions. Anything that has ever bothered your mind about cryptocurrency, bring it. That's why it's called an Ask Me Anything meeting. So thank you very much, guys. Yeah.